And in our top business story, the oil supply glut affecting the global oil market is almost gone, and the next year is expected to bring positive returns for the hydrocarbon industry. That's according to His Excellency Suhail Mohammed Al Mazroui, the UAE Minister of Energy, who attended the 19th ADIPEC exhibition and conference in Abu Dhabi. The opening ceremony of the Abu Dhabi International Petroleum Exhibition and Conference, ADIPEC 2016, was attended by His Highness Sheikh Hamad bin Zayed Al Nahyan, the Chief of Abu Dhabi Crown Prince's Court, and many other officials, including the Secretary General of OPEC, His Excellency Mohammed Barkindo, who briefly toured the exhibition. While OPEC estimates that nearly $10 trillion investment is needed by 2040 to meet future oil and gas demand, officials revealed that the global energy mix is only expected to contribute 53% of the demand by 2040 from oil and gas. As energy demand is expected to grow by 25% by 2040, His Excellency Suhail Al Mazroui, the UAE Energy Minister, along with his counterparts from the ministers of Oman and Bahrain, revealed that global investment in the energy sector has fallen by more than $300 billion since last year, and unless newer effective technologies are explored to find alternative sources of energy, soaring price rises will continue, leading to undermine market stability. While stating that the oil industry has always proven to be resilient despite any downturn, the UAE minister stressed that the UAE is already setting an example by providing a green map to the world where alternative energies, including renewable sources, will complement oil and gas.
I think we're talking about sustainability here. And when we talk about sustainability, we need to address three things. One is the sustainability to invest. And second is the sustainability to exist. And third is the affordability of this form of energy in context of the competition that we are seeing. And each one of those three pillars would require, I think, analysis by itself. But sustainability of this business, we have seen that the oil industry had been resilient throughout the history and coming out of any downturn stronger. And this downturn has been, I think, a bit long. Mm-hmm. But I am sure that the efficiency improvements that I have seen, and I have seen this in ADNOC as a member of the Supreme Petroleum Council, and we listened to His Excellency Dr. Sultan Al Jaber, some of the measures. And I'm sure every country and every company here have sharpened their pencils, have used this opportunity to become more efficient and more resilient, and to ensure that the cost of production is kept under control in a way that we can compete. And I think there is no competition among the different forms of energy. We need all forms of energy, and we need them to compete. And that competition is not scaring us, it's going to make us stronger. So don't be scared or pessimistic if you see a renewable going down. This is good news. That means we need to work harder, and we need to sharpen our pencils. And this is all for the good of the energy mix that we need, and toward more greener sources of energy. And that's the pillars of our strategy, energy strategy in UAE.
As OPEC countries aim to achieve an output deal in the upcoming ministerial meeting in Vienna at OPEC headquarters by the end of this month, leading international oil and gas companies attending ADIPEC stated oil glut does exist, and this is also impacted by the global economic slowdown and low energy demand. Despite these challenges, representatives of ExxonMobil stressed that the global demand is expected to rise as populations expand and global economic output will more than double by 2040.
We're going to remain in a fairly narrow range of pricing for the for the next few years anyway, that I don't see any big price blowouts coming. There's still a significant supply overhang and inventory overhang that has to be worked through. But having said that, particularly in this region, I think all of the operators and investors are focused on the right things in terms of working to get our cost structures more efficient, working to find where we can be more disciplined with the capital and use the dollars to the best that we can. And the industry will do fine out of this. We've been here before. We'll do fine out of this, and I think we'll actually come out of it stronger. We always do. So I'm optimistic about the future, and this region in particular is obviously critically important to the world. Well, of course, here in the UAE, we're involved in a number of areas, but most particularly in the Upper Zakum development. And so we're very pleased with the results we're getting. A lot of new technologies being applied there, and we see a lot of opportunity for upside growth at Zakum. So this is going to be a focus area for us in the years to come.
DAMAC Properties Dubai has announced its financial results for the 9 months ending 30th September this year, revealing that the company recorded revenues of 5.12 billion dirhams. According to a press release from DAMAC, its gross profit margin stood at 57%. Net profit for the reporting period stood at 2.84 billion dirhams, a drop of 23% compared to 9 million in 2015. While total assets increased to 24.34 billion dirhams compared to 23.45 billion dirhams at 31st December 2015. Its cash and bank balances stood at 8.90 billion dirhams, whilst development properties were recorded at 9.79 billion dirhams. With an accelerated delivery momentum in its Dubai core market, the company reported that it had delivered over 800 units in Q3 in its Akoya by DAMAC development, bringing the total deliveries so far this year to over 1,300 units. According to DAMAC, although some international projects are facing unforeseen delays, management still expects to meet the lower end of the guidance range of 2,700 to 3,000 units from incremental deliveries in Dubai. During the reporting period, booked sales reached 5.3 billion dirhams. Etihad Airways plans to issue a debut US dollar-denominated benchmark sukuk and will meet investors over the upcoming days to determine its size, maturity, or interest rate, according to local reports. News agency Reuters on Monday reported that investors have stated that the planned Islamic bond, known as sukuk, could be as large as $1 billion, although Etihad has given no specific indication of the size, maturity, or timing of the Islamic bond sale. HSBC, JP Morgan, National Bank of Abu Dhabi, Abu Dhabi Islamic Bank, Dubai Islamic Bank, and First Gulf Bank are the deal underwriters, according to an investor presentation dated November 3rd. The airline, whose credit is rated A by Fitch, reported total revenues of about $9 billion in 2015. At the end of last year, it had 121 aircraft, and it plans to take delivery of a further 188 by 2026. Etihad Airways partners a funding vehicle for the Abu Dhabi-based carrier and airlines in which it has equity stakes, has issued 2 bonds since September 2015, one of which was subsequently increased in size. And Abu Dhabi will receive 600,000 Chinese tourists a year by 2021, a 265% increase on the 163,935 guests who stayed in the Emirates hotels during the first 9 months of this year, according to the Emirates Tourism Organization. Saif Ghobash, the Director General of the Abu Dhabi Tourism and Culture Authority, was quoted as saying that the organization recently visited China with their partners with the aim of bolstering the sales of holiday and tourism programs to Abu Dhabi. Last year, China had 120 million outbound tourists, a 12% jump on 2014, who spent $104.5 billion US dollars, which was 16.7% more than in 2014, according to figures from China Tourism Research Institute. Growth slowed in the first half of this year with just over 59 million outbound tourists. The UAE receives only a very small proportion of this market currently. As such, of the 14.2 million visitors to Dubai in 2015, 450,000 were from China. Hotels in the Emirate of Abu Dhabi have recently also received the China Tourism Academy's Welcome Chinese certification, given to destinations offering dedicated services such as Mandarin speaking staff. In addition, in September, the UAE government said it would grant Chinese visitors visas on arrival.